In this video, we're going to be looking at a real estate investment trust that is actually one of the highest yielding positions in my personal dividend portfolio, and that is Omega Healthcare Investors, stock ticker OHI, currently trading at $32.06 per share. Now, we have a lot to touch on in this video. Such on if this is a position I will continue to hold in my portfolio. We'll also be looking at a valuation of the company and digging into their dividend to see if it is sustainable. Now, let's go ahead and jump into it. We can see over the past year, this company is actually up around 3.72%, and year to date up around 14.66%, which when you compare it to how other real estate investment trusts have performed over that time period, it is way outperforming. We can see at its current price, it has a starting dividend yield sitting at 8.48%, so a very nice high starting dividend yield. And in fact, if we jump over to the dividend yield tab here on Seeking Alpha, I'll scroll down, you can see there have been plenty of opportunities to buy this company where the dividend yield has been well over 10%. So again, a very high yielding real estate investment trust, the 4-year average dividend yield sitting right at 8.5%. If we jump over to my do-it-yourself investor toolkit, I'll blow up my growth chart and you can actually see this is a position I've seen decent gains from. I'm up around 28% on this position. And if we jump over to my dividend dashboard, right over here, we can see I'm currently generating around $160 a year in annual dividend income from my position in OHI. So if we jump back over to Seeking Alpha, one of the things I want to analyze for this company is the dividend history. If we scroll down, we can see it's been a while since they've increased their dividend payouts. It looks like they've been paying out around 67 cents per share every single quarter for quite some time now. If we jump back to 2018 to 2019, we can see there was a 1 cent bump up, but virtually no dividend growth over the past 5 years. Now, if we zoom out and look at it on a 10-year time horizon, we can see there was actually a pretty decent period of pretty solid dividend growth from around 2013 to around 2018. But over the past 5 years, again, very little to no dividend growth. So if we jump over to the dividend growth tab, we can see the 3 and the 5 year, virtually no dividend growth. But over a 10-year time period, they did see annual dividend growth of around 3.72%. So why is this? Why have we seen such slowing dividend growth over the past few years? Well, if we jump over to the dividend safety tab, we want to see how safe this dividend payout is. And this is a real estate investment trust, so we actually don't want to look at the dividend payout ratio. What we need to look at is the FFO payout ratio and the AFFO payout ratio. And if we look at this FFO payout ratio looking forward, it's sitting at 97.12%, and for the trailing 12 months, sitting at 94.31%. That is way higher than I would like to see it for any real estate investment trust. And if we look at the AFFO payout ratio for trailing 12 months and forward looking, it's sitting right at 100%. So generally what this is saying is almost all the funds that this company is generating is being used to pay out dividends. And it's really simple math. If we jump over to the summary tab, you can see their forward-looking FFO, funds from operations, sitting at 2.76, while their dividend payout forward-looking sitting at $2.68 per share. Simple math would tell us $2.76 minus $2.68 does not leave much capital left over to do things like grow the business. Now, to be fair, real estate investment trusts do have to pay out 90% of their earnings to shareholders in the form of dividends, but that still is a very high FFO payout ratio. So what does this company have to do to be able to grow? Well, typically we'll see real estate investment trusts take out loans, but due to rising interest rates and concerns about maturing debt, this isn't really a good option for them right now. So this gives them one other option, and that is to continue selling off shares. And this is pretty common for real estate investment trusts, but if we go over to the balance sheet here on Seeking Alpha, I'll scroll down close to the bottom. Right here, we can see total common shares outstanding, and we can see this has increased pretty dramatically over the past decade, getting close to doubling over this time period. So keep in mind, if you are bought into this company, you will be diluted as a shareholder, which is obviously not something you want to see, but it is somewhat standard for real estate investment trusts for them to be able to grow. So definitely keep that in mind if you're considering adding this company to your portfolio. Now, one of the positives about OHI is they aren't susceptible to some of the risks that other real estate investment trusts are. For example, office real estate investment trusts are particularly vulnerable as remote work and reduced space needs impact their profitability. And also keep in mind, this is a healthcare REIT. Healthcare is not going anywhere anytime soon, and it's also performed well and has a strong debt profile, making it an attractive investment option to many people. In my opinion, healthcare REITs are some of the most recession-resistant real estate investment trusts out there, which is good if you're considering adding this company to your portfolio. Now, the big question we do need to answer is it trading at a good value at $32.06? And to answer that, like always, we'll be jumping over to my REIT valuation spreadsheet and looking at a few different valuation models to get a better idea of OHI. And like always, if you'd like to be able to download the spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. Let's go ahead and come up here and plug in OHI and hit enter, and you can see all of this data will automatically load in. We've already touched on the dividend data. We can see the 20 and 50-day moving averages down slightly, but the 200-day moving average up around 6%. Analysts currently have a target price of around $33.80, institutional ownership around 68%, and a beta of a little above 1, so you will see a little more volatility than that of the market with this company. Now, the first valuation we'll look at is the AFFO multiples valuation. Basically, what we're doing is we're looking at REITs that are comparable in structure to OHI, and we're analyzing their price to AFFO multiple to see how the market is valuing them. We take their average price to AFFO multiple and compare it to OHI, which is sitting at 11.76, which gives OHI an intrinsic value of around $30.17 per share. Now, the next valuation we're going to look at is the historical price to FFO valuation model, and this is one I actually really like for REITs. And the reason is we can compare them to where they've traded at historically compared to where they are right now. So basically, all I'm doing is I'm plugging in the historical price per share over the past decade, the historical FFO per share, and we can see we are missing a little data here, which is frustrating, but we can still perform this valuation pretty accurately. So this gives us our historical price to FFO over the past decade, and we can see it charted out right here. And on average, the historical price to FFO has been sitting at around 11.56, and for the trailing 12 months, it's currently sitting at around 11.03. So it looks like compared to where it's been historically, it's pretty close to that valuation as well right now. So when we jump over to our dividend discount model, this is the last valuation we'll look at. Basically, what we're doing is we're valuing the company based on how much they're paying out in dividends and how much that dividend is growing over time. And like we've already touched on, they really aren't focused on increasing those dividend payouts right now. And obviously, they really can't afford to do so. They just aren't generating enough funds from operations at this time. So with that being said, they are paying out $2.68 per share consistently on a yearly basis right now with a high FFO payout ratio. Definitely something to keep in mind. So in this scenario, I'm projecting 0% dividend growth, 8.5% discount rate, but even with a 0% growth rate, we're still coming to a dividend discount model price per share of $31.53. So those high dividend payouts definitely keeping that valuation high despite low dividend growth. So when we jump over to the output tab, we can see the two valuations that we used. Keep in mind the historical price to FFO is not listed on this tab, but we did come to the conclusion that it's trading pretty close to where it has been historically speaking. But when we average these two together, we come to an intrinsic value of $30.85, very close to that current trading price, around a 4% difference. So with a 10% margin of safety, it looks like our acceptable buy price around $27.76, and with a 20% margin of safety, acceptable buy price of around $24.68. And like I mentioned earlier, I'm actually up quite a bit on this position. Now, what are my intentions with OHI moving forward? Well, I've definitely enjoyed very nice gains from OHI and received some pretty large dividend payments. This is actually a company I'll probably be selling out of at some point in the near future. I bought this company very early in my dividend investing career, and at the time I definitely didn't understand the power behind dividend growth investing, so I believe the best way for me to be able to live off dividends in the future is to focus on buying quality companies that will continue to increase the amount they pay out in dividends every single year. So while this company does a great job of paying out high dividend payments over a pretty good time period, those dividend payments just aren't growing, and you also won't see much capital appreciation. Not to mention, it looks like it's pretty much trading right at its fair value right now, so now really wouldn't be the best time for me to consider adding shares. But with that being said, if you're someone looking to currently maximize your dividend income, you're someone who believes strongly in the healthcare industry as well, and you also keep a close eye on their FFO payout ratio, maybe Omega Healthcare Investors is a company you should consider adding to your portfolio. They've done a good job of consistently paying out those big dividends for a fairly long time now, so that is definitely something to consider. But there you go, there's a quick analysis on Omega Healthcare Investors, and like always, if you'd like to be able to download any of my spreadsheets, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.